Metro Vancouver home sales in July extended the early signs of recovery that emerged in June. Let's take a closer look. Realtors registered nearly 2,300 home sales on the MLS in July, a 2% decrease over this time last year and 14% below the seasonal average. On the supply side, sellers listed 5,600 homes for sale, a 1% increase compared to 2024 and 12% above the seasonal average. The month ended with over 17,000 homes listed for sale on the MLS, 40% above the seasonal average for the month. Although sales activity is now recovering, this healthy level of inventory is sufficient to keep home prices trending sideways over the short term, as supply and demand remain relatively balanced. We can measure this through the sales to active listings ratio. This ratio measures the homes available for sale against the number of homes sold throughout the month to get an idea of supply and demand. Analysis of historical data suggests downward pressure on home prices occurs when this ratio dips below 12% for a sustained period. Home prices often experience upward pressure when it surpasses 20% over several months. The market overall stands in balanced conditions. May ended with this ratio at 14% for all homes. By property type, the ratio is 10% for detached homes, 17% for attached, and 16% for apartments. Looking at prices, the MLS HPI benchmark price for all housing types in Metro Vancouver is $1,165,000, down 3% from this time last year. By property type, detached homes reached a price of $1,974,000, townhomes $1,099,000, and apartments $744,000. So what's next for the Metro Vancouver housing market? The Bank of Canada held the policy rate steady in July, which could help bolster sales activity by providing more certainty surrounding borrowing costs. If the recovery in sales activity accelerates, favorable conditions for homebuyers may begin slowly slipping away as inventory levels decline and home sellers gain more bargaining power. For further housing market information, go to the Market Watch section of our website.